Good evening. My name is Noel Francis, Chairperson of the Templeton Advisory Committee. At this time, I would like to call the meeting to order. The Templeton Advisory Committee regular business is being broadcast live on TCTV Channel 8 and the TCTV YouTube channel. Responses will be made to comments in the TCTV YouTube channel as time permits. The agenda and meeting materials for this business meeting were posted to mytowngovernment.org/01468, no later than 48 hours prior to the scheduled meeting, in accordance with Commonwealth of Massachusetts open meeting laws. The chair reserves the right to add items to, remove items from, or change the order of the agenda. However, the agenda is posted in advance to give the committee and the public time to review the agenda items and to ensure the meeting runs within the allotted time frame. At this time, I would ask us all to rise to recite the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Okay, there being no members of the public present, I would pass over the public comments period. And that gives us to old business, and I would like to go to 4D, discussion and possible vote on the assessors overlay/rebate account. I want to welcome Justice Graves of the Board of Assessors here tonight. I very much appreciate your coming, Justice. This is kind of a complicated issue, and I know that you will help us out.
Yep, no problem. Hello, Mr. Chairman. Hello, members of the committee. My name is Justice Graves. I am the Deputy Assessor for the Board of Assessors. Just to clarify, I'm actually not a standing member of the board, but I am their appointed Deputy Assessor. Just, so that everybody who is watching understands that, and so that everybody in the room is aware of that. So what I've given out ahead of time to you in a document that I had printed out and copied for your chairman. The first document that we'll talk about is the Schedule OL-1 or the overlay worksheet. But what I want to sort of do is explain what is the overlay account, what balances are in it, what is the calculation for it, what is it used for, more importantly, what can you not use it for, because its use is extremely limited under Mass General Law, and also who can raise and appropriate money into it and who can take money out of it. Sort of to start off even with that, to answer that question, the Board of Assessors are the only entity who is allowed to raise without going to town meeting for the amount for overlay, and they are the only ones who can transfer money out of it. With that, there are a lot of guidelines and restrictions on the account's use and what its purpose is in terms of the entirety of the town, because an overlay account is an important financial function of the town, and we'll go into that in a bit. But what I want to sort of mention is, what is the Overlay 1 worksheet? It is a worksheet that we submit annually when we do the tax rate recap. It is one of the final steps in the tax rate setting process, because the board ultimately decides what the amount is that's going to be put on that, raised within a given fiscal year. If you look at the overlay worksheet, it's the one for fiscal year 2025's recap, because fiscal year 2026 won't be done for several months. You won't have that prepared until the tax rate is set this fall. So what you see are all the balances relative to fiscal year 2024 at the end of it, and the amount that the assessors raised into overlay for fiscal year 2025. What I've written as a notation is that the balance of the overlay account currently sits at $742,000, $897 with 15 cents.
Slow down a minute.
That's okay.
What paper you on, honey?
It's called the Schedule OL-1.
Schedule. Oh, okay. Yeah. All right. Okay,
Yeah.
that's one I got. Yeah, that's the one I got earlier. Okay, thank you.
No problem. So that is how it currently sits, and the current exemptions that were granted in this fiscal year were just under $118,000, to be more specific. $117,982.88 were granted in both exemptions and abatements for fiscal year 2020.
So explain that for people that don't understand that, please.
Yeah. So exemptions and abatements. So an exemption means that due to a special status, whether it be a senior who is over the age of 70 who meets certain income and asset guidelines, whether you are legally blind, paraplegic, or if you are a disabled veteran with a disability rating through the Department of Veterans Affairs, you can apply for and qualify for and get granted what's called an exemption. An exemption is the way that it's worded is it's a privilege from the state legislature, because it's the state that gives the assessors this authority under statute that says, hey, if somebody is under these different categories that you're allowed to do, they are exempt from a certain amount of real estate tax.
Okay.
So that is what the board is able to do with exemptions. Abatements are there is a period after the third and fourth quarter bills are released, the actual tax bills, when residents can come in and question their tax bills. And if there is an issue like a clerical error on their property cards, or if there is an issue with, say, the market analysis, the market actually were to indicate that the property should be lower, so it was an overvaluation issue, or any other type of issue that the board may determine, the Board of Assessors grants an abatement, meaning, hey, your property should have been valued at this. It's been overvalued, so we're going to reduce the valuation, and as such, how much property tax you have to pay, you don't have to pay that anymore. It's a lower amount. So they abate a certain amount off of what you would have normally owed off of your taxes. What's important to understand about exemptions and abatements is that under Massachusetts general law, the primary way that towns and cities get their revenue is through property taxation, both real and personal property. It assumes under the law that all real and personal property taxes will be paid in full within a fiscal year. Now, that doesn't happen
We know.
for even the reasons of people getting granted abatements and exemptions. If somebody qualifies for an exemption, they are not paying, say the $1,000 or the $500 they get off on that tax bill. They're being told they don't have to pay that. So in a system where it's assumed that you'll go to 100% of what is being taxed or what is being committed for a tax, how do you balance that out, and how do you bridge that gap and make it whole? And that's what the overlay account is for. It's not really, I know that it's listed on your agenda as a rebate account, but monies taken from the overlay account go straight into, when an abatement or an exemption is granted, into the general fund, so that it balances it out. Because when somebody at real estate taxes are exempted, let's say $1,000 off, the assessors say that tax account now is $1,000 less. And then they write to the accountant and say, you must transfer this amount, the $1,000, and it goes over into the general fund in order to balance that out, to make that whole again, so that that taxpayer does not have to, doesn't have that burden or that liability anymore. And so that that is off of the collector of taxes' warrant or rolls. Essentially, it relieves the tax collector of that burden of collecting the $1,000 from that taxpayer, because the assessors are saying, no, their taxes are actually going to be lower than that due to these circumstances that they qualify for, or for an abatement. It goes one way or the other. The reasons for both are just different. One, again, is a privilege by statute. The other one is for a myriad of reasons, including overvaluation and a clerical error. Generally, they fall into those two categories. There is a third category that also applies to the overlay account, and that is the potential for uncollectible taxes. So what is an uncollectible tax? So in the case of, say, a personal property account, it would be a business has moved out. All of those business owners have completely moved out of town. The town cannot enforce any collection provisions relative to, they have to get a permit. Well, they're not going to receive permit or try and get permits anymore because they've moved out and they haven't paid, say, the last whatever amount of their personal property tax, and it's been several years. And you've been trying to collect that money the tax collector has, and they can't get that personal property tax. Then the overlay account, through a different process, can have that abated. Again, you have to make everything whole at the end. So the assessors transfer out of overlay the amount to cover that. Caveat with an uncollectible tax is if that person ever came back into town, the assessors have full jurisdiction to put that tax that they abated back onto the books and to charge them for it, and to put that back on if they ever came back. So that's something that you have to track as well in case businesses are coming in and out and not paying for that, although it doesn't happen often. You can also have uncollectible real estate taxes. You typically don't see that, and the process is a lot more difficult to declare real estate taxes uncollectible because towns have the process of going through, putting a tax title on it and going through the foreclosure process for real estate and acquiring the actual real estate. There can be situations where various statutes of limitations have passed on a piece of real estate. There could be a declaration or a determination from land court that there's an issue with the tax title, certain deadlines have passed, and now you have a tax that the collector cannot take off the books and that she can't collect on, but it's still on the books and there needs to be a remedy for it. There is a process through which the assessors have to petition the Commissioner of Revenue for that authority to deal with that. But uncollectible real estate taxes can also impact the town as well. So with all of that, with the three major categories, exemptions, abatements, and uncollectible taxes, you'll notice that there's no other things that can be utilized for the overlay account. You can't use it for expenses. You can't use it for any legal expenses on, say a tax case that results in an abatement. You can't use it on any legal advice that you need to receive on a more complicated exemption. It can only be for the tax itself on exemptions, abatements, and uncollectibles. There is a little bit of a change in it, which happened within, what happened in 2020, where if there was a court case that went on with a tax case, the assessors may have the authority to transfer out the amount for interest on it on an abatement if it goes on for multiple years, and let's say it went to appellate tax board, but that's a little bit more complicated. So we'll just stick to the tax on exemptions, abatements, and uncollectibles. When the assessors look at the overlay account, they have to keep in mind what is the historic 5-year average of abatements and exemptions, and what do they think is coming down the line, as well as what do they think is going to be declared uncollectible off the books, and on any other external circumstances, such as, you typically see an increase in abatements and exemptions with, typically more abatements during a revaluation year. That's not what happened this year. We didn't see an increase really in abatements. We saw an increase in exemptions, which indicates something entirely different. As well as, if there was a major, court case going on that the assessors were dealing with in terms of the appellate tax board, they may consider that in their calculations, as well as whatever is currently sitting on the books for the collector that she has not transferred into tax title yet, or that she is about to complete the process for. So if you're looking at the overlay 1 worksheet, the top balance is what was left at the end of, 6/30/2024. The overlay amount that goes onto the tax rate recap on page 2, that's how much that the assessors raise. That's how much they raise without going to town meeting on the recap sheet. That still has to fit within Proposition 2.5. It is a part of the budget process and a conversation with the town administrator's office at that time. But again, the Board of Assessors raised that on the recap without going to town meeting, as is outlined in statute. And then the overlay balance available, you add the 2 lines, that's what's available for that year. Then the Department of Revenue requires us to give a 5-year average. You see the 5-year average there all the way out to fiscal year 2020 to fiscal year 2024. You see that 5-year average. That's the amount that you need to make sure that you have for your allowances for abatements and exemptions approximately. And then they call it an overlay balance needed in excess. That's the DOR's way of checking to see, after you've considered all of your exemptions and abatement averages, do you have enough? And then you can compare that down to what's called potential future liabilities. Basically, what is still on the collector's books according to the accounting officer as of the end of that prior fiscal year. In our case, it was, just over $266,000. And so you want to make sure that you have enough overlay to cover that as well, because all of those balances that are calculated for potential future liabilities are anything that has not gone into tax title yet. Now, at the end of a fiscal year, you have to wait until you get past a certain point. The treasurer collector would be better suited to answer this in terms of when she can certify things into tax title. But once those are certified into tax title, those get taken out of that. And so really for real estate receivables, you're only looking at that's what's at the end of fiscal year 24 that the collector wasn't able to collect, that she's about to transfer over into tax title. Now, personal property taxes are different because they keep rolling over. You can't put them into tax title because they are a different type of personal property is not the same as real estate. Anybody knows that personal property is anything that is not real estate is the easier definition for it. But you can't, collect it in the same way. So you see that balance will just keep rolling and rolling over. And it will fluctuate depending on if there's been abatements on older accounts on that. So with that being said, the overlay worksheet, when it's being done, is when everything's been closed out with the books. So your accountant and your collector are matching up. Everything's been submitted to the DOR on that, as well as you're basically at the end of your fiscal year at your tax rate setting process. So that is what the assessors have to look at when they're about to submit to the Department of Revenue. The next item that you have, does anybody have any questions before?
I do.
Yeah.
No.
Okay.
So I'm seeing your overlay balance for 2024 is 860, 880.
Yeah.
And then I see that you are minusing out the 108, 567, and that's where you're getting up with is it 752 or?
Yeah, so the 752, so the 108, of course, is the 5-year estimate. If you were to do all those 5 years, average them together, you'll see the 5-year average. That's where the 108 is coming from. That is a check to see is how much that you have in the overlay account going to cover what you expect for your abatements and exemptions. So yeah, that's where the 752 is leading down. Do you have any other questions, April, or does that? Okay.
Well, I do. So because if on an average year, right, you're saying you have $109,000 a year.
Yeah.
Right? Why the 752? Because that seems like it's 3 times bigger than what you actually need in any given year.
So I'll explain where the prior years filling into it have gone in over time. But you also have to keep in mind, so it's 752, and then compare that to what is our potential liability that's still outstanding, because you still have to be able to cover that as well. So the 752 is higher than the 266. So you still have enough in overlay to cover that if something were to happen. But no, I see what you're saying on that there is quite a bit of a balance in there. Yeah.
There is, and even if you double the 266,
yeah,
you're still significantly over that. So I'll wait till later on when you get to that part.
No, that's okay.
I have another question.
Yep.
Looking at your liability from 2018
Yeah.
to 2024,
Yeah.
do you update it, like reduce the balance or as it's received into the following year, or is it carried forward? Like, I'm not understanding. So you have all these separate years.
Yeah. So
They
that's
total more than the 742, which is what you're claiming covers. It's supposed to cover.
So those, are you talking about where it says potential future liability summary, that sheet
Yes.
later on?
Yeah.
So that is isolated to each individual year. So at the end of fiscal year 2018, it was 289. I was going to get to that. But those are, you would be comparing that within each of those individual years. That's just a summary to see what does the collector usually have on at the end. So you can sort of see a range of.
Do you have the numbers in which you've collected or these? still outstanding as of today?
I have no idea what's outstanding as of today. These are just the balances that were reported from the accounting officer on each of those. I have nothing to do with the collection process on that side. So I don't get to see what's collected unless the collector and the accountant report it.
So you may be carrying more in your overlay account than what's actually a liability?
Yes, yep, and the board can, and I would say that, yes, it does have more than the current liabilities that are outstanding. I'm not going to say that that's not the situation right now, but I can talk about later on why we've got to where we've gotten, what the board has talked about a little bit, and where we stand in terms of the overlay account itself.
Okay.
So, all right. Does anybody have any more questions?
Go ahead.
Okay, so in the informational guideline release, what I want to talk about, and I know this has been a subject, and this is what you're really discussing is, is the board going to certify out an overlay, essentially any money out of it into the overlay surplus account? Or what is the board's consideration when doing that? So the informational guideline release, specifically number 17-23, released in August of 2017, outlines the rules for the overlay account and overlay surplus. You don't have to take my word for it. You can see exactly what the Department of Revenue tells us front to back on that. What I would like to tell you is what's on pages 3, 4, as well as 5 and 6. So if you go to page 3 of that document, I've highlighted a couple of sections. We're going to jump over overlay deficits because that's something more I want to bring up later, but not right now. What I'll talk about is section 3. It's called determining overlay surplus. The calculation of what to transfer into overlay surplus, and this is sort of where the terminology may get confusing. The amount in overlay is where it stands when you're doing the calculation. Excess overlay is whatever amount is calculated that the assessors could vote from 0 to that 100% of that amount for transferring over to overlay surplus. And what's in overlay surplus is what the board has actually transferred over into that by vote of the Board of Assessors. Just to sort of go into the statutory definition, the excess overlay is the amount of the overlay amount that exceeds your property tax receivables, what's still on the collector's books. We talked about that. And on page 4, your potential abatements, which is really any of your potential abatements or exemptions or anything that has to be abated due to it being determined uncollectible. If we go to page 2, and if we actually look at page 4 and page 5, the way that excess overlay is calculated is that you have your balance of overlay, and then you minus out what is still outstanding for the books of the collector as of the date that you're calculating. How much is, for both real estate and personal property, what do you anticipate could be uncollectible? And then the assessor's judgment, are there any outstanding ATB cases? Are there any items that they think could come up as an ATB case? That sort of thing. You can see several examples of how that can play out in different, sample fiscal years. But what's important is the use of records. If you look at page 5, and the reason I'm going to bring this up is I'm going to tell you sort of the tale of 2 fiscal years, fiscal year 24 and fiscal year 25 with regards to that. Making the determination, the Board of Assessors have to use the account balances that appear in the accounting officer's records. Specifically, I have to pull records from my department or from the assessor's department, what we have for overlay, and I have to ask the accountant for what they say that we have on overlay. Whichever one is the lesser of the two is the number that we have to use. Then on the other side for property tax receivable, since I'm not involved in the collection process, it's the collector and the accountant. You pull those two numbers between the two, and whichever is the higher balance of the two is what the Department of Revenue tells us we have to use for that. Liz, did you have a question?
Why would those numbers be different? The first set of numbers and the second set, within the first set,
Yeah.
Why would those be different? And then within the second set, why would those be different?
So it depends on when you make the calculation, on that day that you make the calculation. So for example, the collector could have just collected funds that she's posted into the batch, and the accountant has not reflected that on the general ledger yet. The assessors could earlier in a meeting vote for an abatement when they're considering this, or vote for an exemption when they're considering this. The assessors then know, okay, well, we've lowered what we have for our overlay account. So we need to take that into account when we're doing this. So they'll go with, their number versus the accountant's number, because as of that time, the accountant wouldn't have been given the paperwork yet to change that on the general ledger yet.
Okay, so it's a timing issue between the figures.
Yeah.
Okay.
Yeah.
got it.
And you'll see a fluctuation. I mean, typically when it's been between me and the accountant, we're talking about literally that day's abatements. That can make a difference, or exemptions. When it comes to the collector and the accountant, it could be a batch or two that hasn't been reviewed and posted yet. But it's not typically that much. We'll talk about that in a minute. So those are the records that we have to receive, and think of it sort of as, like I said, it depends on the day of the calculation. So all of the numbers that you see on the overlay one worksheet are when everything's closed out and isolated to a specific fiscal year. So all of the issues between the collector and the accountant have been resolved. I've balanced everything out with the accounting officer. And so everything is, cleared through. We have verified all the numbers when it goes on to that. Again, when we're talking about when the assessors make that determination, it's not in isolation to this is when we're going to do the tax rate setting. It's to, we're going to do it on this meeting date, and this is when we're going to grab that information for it to make that decision. So there can be a difference. Yes, April.
But my only concern is that you may be setting the tax rate and your conversations may be based around the fact that these numbers are factual, when indeed they could have been paid or lessened throughout the years. It doesn't look like these balances have been updated since 2018.
What do you mean it doesn't look like the balances have been updated since?
As reported on your overlay.
Yeah.
One
Mhm.
worksheet here. You couldn't give me the exact numbers.
For what?
Potential future liability.
Yeah,
No.
I didn't. Yeah.
Past liabilities. So like, are these what, I guess these dollar amounts that I'm seeing here on this worksheet?
So the real estate tax receivables are typically what the collector didn't collect in that fiscal year that she hasn't certified into tax title yet. It can include other years if there are things that weren't certified into tax title, like let's say way far back, or if there's a specific account that can't be certified into tax title, because that can happen as well.
Typically, how long, do you know typically how long we're carrying a balance of back taxes owed?
So I mean, that's a little bit more of a broader question, because that's kind of including tax title. This doesn't include, if you were to include tax title in all of this, then these numbers would look extremely differently, because tax title is a much greater total than what's outstanding at the end of the fiscal year for
Okay,
the
so these are
collector.
properties that just have not gone.
These are properties that haven't gone into tax title. Think of like your we're going back to fiscal year 2025. Think of like if you didn't pay your real estate taxes for fiscal year 24, this is that. If you didn't pay your taxes for fiscal year 23, that would have already been certified into tax title. That's not included in that total, because that's not a future liability. The town has secured a tax title on that.
So is this saying that we have roughly almost $290,000 in back taxes in 2018 on property that hasn't gone to tax title? Is that really what this
That
is?
was my question. Thank you.
Yeah, that's the combination of real estate and personal property.
And I hate to sound redundant, but I'm just trying to educate the public as we go along with our conversation.
Can I say something? I've gone in and talked to Cheryl,
Okay.
and she's the town tax
Collector.
collector, tax collector. She has on her wall a whole list of properties that she's taken in to tax title. She's got a whole wall of the ones that she's been successful at. It takes years to straighten some of this stuff out. And sometimes she'll get it almost resolved, and the people that own the property will transfer it to someone else. So she has to start all over again. It's a really complicated thing that she has to deal with. And yeah, there is a lot of money tied up in it.
Technically,
it's-
property can't be transferred without tax liens being.
There's,
transferred.
well, I forgot how she told me that it works, but they do play games. they're good at it, they're professional at avoiding taxes.
But
And then it costs money to do this too.
Okay.
I'm just amazed that we've got that much money sitting in 2018.
Yeah.
That hasn't
Well,
addressed one
these
or
are-
the other.
so these are the balances that were on each of those. This is just to show you what, if you took any of those years and made an average of those, what we sort of keep as a regular, what kind of happens at the end of each fiscal year. It does not mean that fiscal year
Literally.
2018 literally has 289, because it could be far less. Cheryl could have gone out and dealt with, those could have all been certified into tax title. She could have dealt with all of those, and there could be nothing left on that.
But you're not clearing the funds is the problem. Like they're still being retained.
They wouldn't be on the books anymore, so I can't.
This is, he's just showing us what they
How it
had used.
how it fluctuates on the overlay one worksheet, how it changes from year to year sometimes.
Not that it's literally there anymore, but that's what it was then.
Right, because you can see how things were in fiscal year 2018, then you look up and see how things changed in fiscal year 2020, because there's an economic condition that happened in the middle of these years. So you can sort of, instead of just looking at a couple years in isolation, see what happens and make your own judgment.
So we're not saying that the day that this was produced,
No,
that we go back to 2018. This is saying in 2018.
On the recap sheet, on this
That's what the number
worksheet,
was.
that's what the number was.
Okay, that's different than what I thought we're saying. Okay.
Okay.
Thank you.
Go and
Instead-
talk to her,
instead
you'd
of-
be amazed.
Instead of printing out 18 of these or whatever
I
number.
appreciate that. Thank you.
You'd be amazed at the work she's done.
Is there anything more that you wish to say?
On that document, and I think we've talked about potential future liabilities. That's what the next document was. I didn't have anything to talk about with that any more than what we've sort of discussed.
If you could, Justin.
Yeah.
What triggered this was at a recent Board of Selectmen meeting, a joint meeting with advisory that was held at the end of June. I think it was June 25th. Is the town auditor, the Roselli firm, he made the statement that that he, in his opinion, that the overlay account was greater than it should be. And as you know, we had advisory with different members. We had a hearing probably a year and a half to 2 years ago to discuss, the subject, and advisory. We did not make a recommendation at that time. So I guess is a two-part question is, did the Roselli firm, did you talk with the Roselli firm prior to them making a recommendation? And if so, did they provide you with a number? Do they feel that the overlay account should be, or do they give you any advice?
No, so that recommendation on the audit has popped up on the FY23 audit and the FY24 audit that was just done. And I don't disagree with the finding that there's a lot compared to our outstanding, what we anticipate for abatements and exemptions. In terms of a conversation with Roselli and Clark, the only time I've had a conversation with them was after they had already drafted the letter and sent it to the town for the fiscal 23 audit. I had sent an email to them explaining that the assessors were looking at this, that this was an active issue that they were looking at. But in terms of any conversations this year, I wasn't asked a single question on that. And in terms of a dollar figure, I've never been told in writing, verbal, or in any other medium what the recommended amount would be.
Okay, I think this kind of cuts to the core of why this is on the agenda. If you look, the 5-year average of abatements and exemptions granted is $108,567. And the total potential future liabilities for FY24 was $266,000, and the largest amount was $348,000 for fiscal year 2020.
Mhm.
So let's, for argument's sake, take the largest exposure amount, which is $348,000, and add to that the 5-year average of rebates.
Mhm.
So you have a number that is, probably give or take a few thousand, roughly $460,000. Is that,
Yeah, I'm not going to
That's fair.
disagree that it's significantly over. I mean, that's not out of the ballpark for what the assessors calculated for excess in fiscal year 24.
so I guess what I'm trying to drive at is it looks like, it looks like there's roughly $400,000 over the abatement figure granted of 108,000 and change, and then the total largest exposure in fiscal year 2020 of $348,000. So you take those two numbers, and you're still $300,000. There's still a $300,000 cushion. I guess I guess I could call it a cushion, and I think that I wish Roselli had given the town a number, because they look at these things all day long. I think the cushion should be less than $300,000, but I think the rub is how much below $300,000 should it go?
Right. And I've never had a conversation with Roselli about the exact numbers, so I don't know what they're
Sounds
thinking
like a
when they make
problem,
the
yeah.
recommendation.
Well, and that's the other concern, is that the recommendation has been made 2 years in a row and nobody's acted on it. I don't understand, why have an audit if nobody's gonna move forward and act on the recommendations? So technically, we have about $400,000 in excess sitting in this account, and we have departments that we can't fund.
So that's what I was going to get into with, let's talk about the
Okay.
trends with exemptions, then let's talk about, the tale of two fiscal years, what happened in 24 when we were notified about this audit recommendation, and what happened recently in FY 25 when the assessors had to do this calculation. One of the things that the assessors have to look at is the trends in exemptions. So you see sort of this, it's a summary of what has happened just in dollar figures and raw amounts for exemptions in the work-off program over the years, because that all comes off of, since the work-off program is an abatement program, that all comes off of overlay. What you'll notice is, and I'm seeing this continue with some of the returns that we're getting for fiscal year 26, although the period for exemptions to be filed is a 9-month window. It's from July 1st all the way through until April 1st of the next year. So it's a 9-month window. The issue of that can change, it can fluctuate. But due to the changes that happened in the Department of Veterans Affairs, that happened before the HERO Act was implemented by the state, we have been seeing a much greater increase in our veterans coming in and actually qualifying for exemptions.
Good.
And we're seeing a lot more questions lately from our elderly population, those who are finally aging into 70 plus, because the law as it stands is that unless a town votes lower, 70 and older with certain income and asset limitations are for the senior exemptions, what we call our clauses 41C and 17D. There are other people that can qualify for the 17D, such as certain minors, and surviving spouses and widows. But what we saw from fiscal year 24 to fiscal year 25 was a significant increase in our veterans exemptions. And that's something that the board, and I believe just with the short, just with what has happened over the last year, that's going to continue to go up. Exemptions went over 110,000 this year if you combine exemptions with the work-off program. So that's something that the assessors have to look at, is where is the trend going, what is happening, because you don't want to make a decision on the overlay account and affect future years, because you don't want the town to, you don't want to make a change and then the town sticks with that change. And then you go, 2-3 years down the line, and now you're in a bigger situation. You had a healthy account in the first place.
Can I ask you a question
Yeah.
in regards to this?
Mhm.
The work-off program, are you budgeting the $500 per senior per veteran, or are you budgeting the $2,000 max?
So in Templeton, what was voted on is the 500, so it's the
That was a
500.
long time ago.
Yeah, 2012.
Okay.
Yeah. I believe it was 2012. I have it on my paperwork in the office, but 2012 rings a bell as one of the articles that it was voted on. So yep, so $500. The state only recently changed the abatement program so that it could be up to $2,000. Other towns have gone for special legislation and can do all sorts of different things. So if you look at other towns, just keep in mind, was it an act of special legislation? Is it under the old rules? Is it under the new rules? And sometimes it's under special legislation because the assessors are using an alternate funding source, not overlay, because some towns have the ability to, for some reason, they have a big donor. I've heard it. This is mostly the example that's given at certain conferences that, there's a big donor or the residents choose to donate to a certain account and that account is either for an alternate senior exemption or it's for a different type of work-off program that the state has given the assessors in that town only the authority to do. So where it's coming from and where its limitations are can be a little bit different. But
If I-
2,000 is the current standard.
If I may,
The current-
Justice, say the veterans abatement is $2,000. Am I correct in that?
So
Hero Act.
So in the HERO Act, well, it depending on what it created two specific options that the town could do, and technically they can add on to each other in certain combinations. So actually, if you were to use them in certain capacities, you could go and you could more than double what's on certain exemptions for veterans right now. You could do that.
But say the town grants a $2,000 exemption
Yep,
for a veteran.
they
Is that
could.
is part of that reimbursable by the state?
So in terms of exemptions, with what the HERO Act did, it gave the towns the ability to do so. What the town has right now is what's considered the mandatory statutory requirement that for, let's say, a 100% disabled veteran or considered 100%, it's $1,000 off on their taxes. Because it is enforced and the state says every town and city must follow this minimum guideline, it's considered similar to a unfunded mandate in a sense. So they have to reimburse you. So they reimburse you at $825 per veteran granted. If you choose a local option, and this is true for whether it be seniors, the blind, or veterans, the state doesn't reimburse you for the difference on that. So if we're talking about, the standard right now, or the rule in town is that it's $1,000 per 100% disabled veteran, you get $825 of that back. If you, in a future fiscal year, say we're going to up that to $2,000, your reimbursement per veteran is still the $825. The town still has to account for that difference. They do not increase it. There are no additional reimbursements due to accepting a local option, because as it states, it's a local option. You don't have to do it. The townspeople don't have
It's a
to.
choice.
They don't have a choice when it comes to the 1,000. If a disabled veteran comes into my office and gives the required information and applies for it, it must be granted. Doesn't matter.
Okay.
So on these, is it property? I'm married. I'm
Yep.
married to a vet who's
Yep.
partially disabled. If he were 100% disabled, right, and we were both above the magic age for seniors, do we get to add any of these together, or is it the one with the greatest, only one, and it's whatever the greatest amount is? How does that work?
Different scenarios can result in I would have to see what the specific circumstances are at that point. Typically, it's whatever is the greatest amount we would try and get the person to apply for, but there can be exceptions to that depending on the categories.
So if I were blind,
Yeah.
I'm feeling like I'm going blind, and Tim were 100% disabled. He's not, so, but if he were, would we then be qualified for $1,437.50?
The answer is, I'm going to give the assessor's answer is that it depends. I'd have to look at some other factors with that to determine if it would even be that amount. If it should just be one or the other, I'd have to look at that for that specific.
Okay, so it's everything.
The fine
is-
print.
Each of the fine print,
Depends.
everything
Okay.
interacts in different ways.
That
So it would be on a case by case basis. I'd have to talk with people about that. Can they? The answer is it depends. It's not like it can't.
Not etched in concrete.
Right.
Mm,
So,
I think what we were talking about as a group was that we would like to see the senior work-off program be increased. But that would be up to the assessors then, right?
if the senior work off to be increased, you mean like the dollar
A
amount?
dollar amount, yeah.
That-
Or the number, even the number of seniors.
So to increase how much a senior work-off participant could earn, that would be up to, that is explicitly a town meeting vote.
Okay,
Town
yeah,
meeting can
but I mean, maybe the assessors would have to sit down and figure it
Yeah.
out, see if it was manageable, what they
Yeah,
could do.
So what
Yeah.
we would do is go through different scenarios on what we would, and draft up the language for town meeting. We would go through different scenarios, how that would impact the overlay account over a period of time, not just in a year-to-year basis. I'd probably have a conversation with, because I would be the one doing the legwork on it, have a conversation with the town administrator.
Yeah.
Is this something that we can even handle within the levy limit? Is this something that we're okay with because the assessors want to propose this? And then there'd be dialogue on that. And then the assessors would propose the statutory language for, it would go into the selectmen's warrant, and then it would go in front of the townspeople to decide one way or the other.
yeah, to be fair, that amount
Mhm.
is not a town administrator decision to even, I mean, you can ask
Selectmen,
what
probably.
happens. It is town floor decision as to what happens with it ultimately, and whether or not there's, tax limits, tax whatever. If town floor says, this is what we want,
Then, right,
that
then-
person needs to figure out how to make it
Right, then the
happen.
town has to adjust for it because they know that there's going to be a change for it, correct? Ultimately, it's town meeting floor's decision on the amounts, within law. They
Yeah.
can't just say, we'll do 5,000. That's not the law. You can't do that at town meeting, or that would be, the DOR wouldn't allow us to change it like that.
Justice, if I may.
Yeah.
As you know, we're a recommending body is what I am looking for, even with the HERO Act and the like, there's still to me, a great difference between the average of the 5-year reimbursements, plus the future liabilities. And I understand that's a figure that's in flux, but we're still talking about a fairly large dollar amount difference. It might be $300,000, it might be $400,000. And the way I look at it is, a conversation with one of the select board members not too long ago, they were drilling down as deeply as looking at it, try to balance the budget. They're looking as deeply as whether or not to fund $100 post office box. And I think with the situation with the schools and their requests, we're really looking for every dollar that can, go into the general fund. And I understand it needs to be balanced with, you don't want to be caught short in your
Yeah.
fund. I get that. So the question I would pose to you is, what is a responsible recommendation that we on the advisory committee can make that would help the town and the general fund, but also protect, your assessors from being caught short?
So I guess,
How do we arrive at that recommendation?
so I guess this is a good point to explain that when there's overlay at the end of a year, that still remains in the account. Keep in mind that it's one-time funds. It's coming from past fiscal years when it was raised on the recap sheet. It wasn't utilized, and so it stays in that account. In terms of what I was talking about earlier, where you have the overlay amount, then you have the calculation of how much is excess, and then the assessors transfer an amount, from 0 to 100% of that excess over to an overlay surplus account. It does not go into the general fund when the assessors do that. It is considered one-time revenues, and it's one-time revenues that the town already has on its books that is within the overlay account. When it gets transferred to that overlay surplus account, it can be used for any lawful purpose that's allowed under the town, similar to free cash. And if it's not used by the end of a fiscal year, Then it gets rolled over into the calculation for, it gets rolled over into, it's called the undesignated fund balance. And then that gets, in the ordinary course of business, you'll see an increase in your free cash the next year because it essentially rolls over into free cash. If there is, issues that are affecting the town that get them, quote unquote, hit on their free cash where it gets calculated down. And that's more of a question for the accounting side because I don't deal with the calculation on free cash. Then you may see an increase, but not as much as what the assessors had actually transferred into there. But that 85 goes into the, I'm saying 85 because that's what happened last year. The assessors voted for $85,000 to come out of overlay into overlay surplus, into the overlay surplus account. And then it rolled over into the free cash calculation for next year.
So every year you're already transferring X amount of dollars over, or are you carrying a balance forward every year until you have excess like this?
So you have to carry a balance forward. So I guess that's where it gets into the next two sheets, the excess overlay breakdowns, sort of explain what's happened the last two fiscal years. So the assessors back on 5/21 of 2024 met and considered the balances of the overlay account. At the time, the overlay account would have stood at 805,000 and some change. And what the accountant and the collector's amounts for real estate and personal property taxes were very similar. And that resulted in a calculation of excess overlay of about 364,000. So what we talked about was, because of the unknowns, even at this time with the HERO Act was just, it had not passed it, it passed that fall in August. We knew that that was coming on. We had already seen, and I had already been receiving people trying to change their determinations for the VA since the VA had already implemented changes. So we knew that there were going to be fluctuations with exemptions, and that the board was also interested in looking at what to do with exemptions for the future if we were going to change anything with those and bring that to town meeting. So what I had recommended was we lower the amount in the overlay account to about 600, just under 600,000 or just around 600,000 and do it over a span of years, because by the time you get to the 600,000, several years have passed. What's going to be, your outlook is going to be a little bit different. At that point, you could either look and readjust your plan, or, that's where the account should sort of sit as a healthy amount and not, continue to collect like that. So at the time, the Board of Assessors had voted $85,000 out of the overlay. From the calculated excess, it got transferred over to overlay surplus, and then that went into free cash with fiscal year 25 as part of to make it more complicated, as part of the fiscal year 2024 certified free cash that you can use in fiscal year 25. Basically, the prior year's free cash certified, you can use it this year until that year is over, and then you got to do it all over again, the calculation through the Department of Revenue. What happened?
So what this is kind of a projected calculated drawdown.
This is exactly what's outlined in this sort of basic table right there is exactly what we're doing in accordance with informational guideline release 17-23. This is your balance according to the assessors or the accountant, whichever is the lesser. This is your outstanding real estate. This is your outstanding personal property. This is your outstanding exemptions and abatements and ATB decisions. This is what's outstanding for, taxes that are going to be declared uncollectible. This is what you have left. After that, that is the amount from, if the assessors want to vote from $0 to 100% of that amount, what they want to transfer over, and the assessors voted to transfer 85,000 last year.
But this breakdown that you gave us, would you say that that's accurate, considering that's like at the beginning of a billing period for a quarterly tax bill?
So it's not at the beginning. So if we're looking at 5/21/2024, that debits for the next fiscal year won't start until July 1st. This is everything, January 30th and back, or forward to January 30th, because those committed balances are not, the collector can't physically collect those until July 1st anyway.
Right.
So that's not a part of that at all. Anything in that. And actually that's at the end of the billing period, because or that's at the end of when a due date was, because that meeting was on May 21st. Fourth quarter real estate taxes would have been either due on May 1st or the next available business day that the town had. So a quarterly billing would have been, all of the quarters would have been completed at that point. This would have been where the collector and the accountant were sitting on the, where they were both on with regards to what was still on the books after that quarterly billing, after all quarters had been completed at that point. And this is how things would have sat after, for the assessor side of things, after all abatements and exemptions were granted, because by that point, by May, we would have already reported to the Department of Revenue how many exemptions that we had granted during the year, and we would have reviewed all of them. So that would have basically, we would have had those firm numbers at that point.
For prior years, so they voted to transfer 85,000 this past year.
For fiscal year 24, correct?
24.
At the end of fiscal year 24.
Do they typically do that every year, a set amount every year, or some years they don't do anything?
Some years they won't do anything. They look at the account, but it's been more of a practice since I've been the deputy assessor, and with this audit recommendation that's come out. To be honest, this audit recommendation and the current balances on overlay are more of a recent development. The balances as they stand and how they've grown is more of what's happened in the last few years, not what the town's been sitting on for, say, the last 10 or 20 years. The overlay account has never, been this high before. It's been in a different state in different years. It also, you have to keep in mind that different rules regarding the overlay account and how things were done changed with, it was called the Municipal Modernization Act. This conversation would look very differently right now if we were talking about the Municipal Modernization Act, because all of the dates I'm talking about and all of the separation of things would get more complicated if I told you that instead of this is a total balance that you can calculate this out of. No, you have to keep a balance for pretty much every, there would be a separate amount of fiscal year 25's overlay, fiscal year 24, fiscal year 23. We still keep it like that in the office. But in terms of getting overall numbers like this, you couldn't do the calculation like this. It wouldn't be allowed, or it wasn't how it was done back then, because overlay used to be several different accounts split up by fiscal year up until municipal modernization happened. Now this is what the assessors have raised this year. This is what's in, these are the prior years that have rolled over. It's all just one account now.
Is it fair to say that the current set of assessors, right, have basically been exceptionally cautious and built that up? So now it's gotten the attention of various people.
Right.
And okay.
Well,
right.
there's two ways to look at that. So when municipal modernization changed, it's good in some ways, bad in others, because if you look at, we're talking about, instead of, if you were to grant an abatement for an uncollectible tax for fiscal year, let's say 2019, you would have to make sure you had a balance on your overlay account for 2019. You couldn't use 2018, you couldn't use 2020. And if you didn't have an amount for that, you would have to raise that on the recap, essentially. Now, that's not something that I've ever had to deal with since municipal modernization came out, like right at the turn of the 2010s. But with having everything in one group, that means that anything from the year 0 up to the year 2025 is fair game to be declared uncollectible, kicked back on the assessors, and then they have to
Come up with the money.
come up with the money. The town has to come up with the money on that.
Makes sense.
Okay.
So it's more holistic of the town's total liability, I would say, professionally, in one sense, instead of putting it into buckets, even though you can look at it like that still, because that's still helpful for certain figures and understanding where trends are going in both the whole sense of the town and in specific, years, because different years bring different economic issues, and different economic issues bring out, different problems in the market. And that can result in, an influx in people seeking exemptions, an influx of people coming into the office for abatements, or an influx of people not paying their taxes. So
You have to be prepared for all that, because you can't go backwards if you're
Right.
not prepared.
And 2020's numbers on here are a perfect example of that.
Okay.
Okay, are there any more questions or
No.
of Justice? And Justice, you have anything more that?
I did want to say that, so in terms of past years, it used to be, it was the policy of the town through the town administrator and the town accountant with the financial management policy that any amount in new growth that was over what the town estimated and any amount of state aid that was over what the town estimated would be, and I believe it says this in the financial management policy, would be swept into the overlay account. If you looked at new growth over the past, and I didn't include that, over the years, as well as, different fluctuations in state aid, the reason why the overlay account has grown the way that it has is because when doing the final preparations on the tax rate recap, that is what was done. Those monies were essentially swept into that account. And because, well, we have issues with long outstanding property, real estate taxes that, yes, are secured by a tax title, but let's say something happened and the court said that they needed to kick back, to the town and they can't be collected. American Tissue comes to mind
Mhm.
as being an issue. As the accounts kept growing, that was okay for the Board of Assessors. They approved it every year. But something that I've talked about with the board is that, my recommendation to them, because I do offer recommendations to them in full transparency, and it's a conversation back and forth on what we're looking at with this, is the 600,000 is a good number to sort of rest at and to sort of fluctuate around with, because let's say, town meeting floor voted for something in one particular year, you're not caught off guard completely because you still have an outstanding, amount and overlay to absorb any, potential, additional exemptions. But then you have to plan for the next few years because you need to raise that money, within the budget, but without going to town meeting vote, and have an understanding when the budget is being drafted that we'll have so much money that the assessors can raise. And I've also talked with them and we've set high limits on the overlay account. So there's no more just sweeping funds into it in order to just keep increasing the account, because that's not responsible either. Because of where it stands right now. Again, the situation was very different, even within the last 4 years, at the beginning of the last 4 years versus the end of the last 4 years. Because of that. A tale of two fiscal years, the assessors didn't vote to do a surplus for fiscal year 25. So the account balance is still going to sit at the 742, 897.15, because the accountant and the collector's numbers do not line up in agreement. At the time the Board of Assessors was looking at this on June 10th, the outstanding real estate tax receivables from the accountant were over 2 million. Without having to look at anything else, that is much higher than the overlay balance. If the assessors were to do it, to do the calculation, there was no excess overlay at the time. And that was very concerning to the board, and they voted to not do any surplus when they looked at that this year. As essentially due to a lack of information as to why this is happening with what's outstanding on the accountant's ledger. And, it's something that we talked about, do it for so many years. If there's an issue with a particular year, you can essentially take a year off and you still wouldn't be too far off from your goals on the account. So I guess, fiscal year 25 was the year to take off, which I wasn't expecting when I pulled these numbers. Hopefully those numbers resolve when the collector and the accountant, when the accountant submits everything to the Department of Revenue at the end of the, calculations for fiscal year 2025. But as of when they pulled those numbers, and even back when we were starting to get the numbers at the beginning of May, or I was trying to gather the numbers at the beginning of May, it was over $3 million in outstanding real estate, where the collector was not estimating her on her side of the ledger. It was more in line with her prior years and what had been reported in prior years and what was still outstanding for various tax accounts. So that is something that the Board of Assessors took notice of and decided not to do anything as a financial matter on that.
So your recommendation overall would be $0?
Well, it depends on the year by year. If, if there's still issues with, the collector and the accountant not being able to reconcile, if there's an issue on the, on one side of the ledger or the other, and like I said, the collector's numbers are more in line with what I'm expecting and with what I've seen on her books with what's been going on when I ask for those reports. The accountants have told me that yes, it should be more in line with what the collector has for numbers. But it's something that they have to reconcile on their end and determine what's going on with that. The assessors they'll look at these numbers over time and we'll have conversations about it, but the assessors really will only consider doing a surplus, if they have a later meeting in April, or typically in May or June is when they make those votes, because all abatements and exemptions have been done, because at that point, the April 1st deadline for exemptions have concluded. We're able to process everything in our, get everything prepared in our office, and the assessors are able to make informed decisions on those exemption applications. Abatements have already been done well before that, because it was either February 1st or the next business day when those applications were due. The assessors had 3 months to look at those. The assessors would have acted on those a lot sooner. We would have already done, whatever due diligence we needed to and talk with those taxpayers on those. And at that point, when we're talking about May 1st or the next business day, all real estate taxes are supposed to be due. So then, anyone who, didn't pay their first quarter, probably didn't pay their second, their third, and their fourth, what that total outstanding liability approximately is. You're closer to that true number. And so the assessors feel more comfortable with being able to vote during that timetable. But when everything is not in balance at that point, you have an issue with that. In terms of a recommendation, the assessors are looking at it. I've constantly, without a town administrator, without a permanent town administrator, since we have an interim right now, I've had conversations with the prior town administrator about what we need to raise and overlay just to stay level year from year, because that's really my recommendation is to, we go to the 600. Each year we raise what we need to cover what's outstanding, so that we don't just keep adding onto the books, but so that you're not cutting into that, so that, down the line, you don't cut below the numbers you need to. And then the DOR says, you don't have enough in here. This is a problem. And those sections that I didn't talk about when it comes to, overlay deficits, the Commissioner of Revenue, essentially through the Department of Revenue and the Division of Local Services, can force certain enforcement measures if you are not, proper with your transfers out of overlay or how much you raise, including but not limited to, they can say, hey, you can't get your tax rate approved until you raise enough money. Depending on the situation, that may require changing things on town meeting on the town budget wise in order for that to work. They may hit your free cash harder because they may consider a transfer out of overlay to be the equivalent of voting out of free cash. And I forget what there was a third event that can happen as well. It's on the list. It's on sanctions for excessive transfers. They could reduce certified free cash by the excessive transfer, treat any appropriation from overlay surplus as an appropriation from free cash, or require local action to remedy the excessive transfer before excluding the tax rate. The reason I bring this up is because several cities and towns, and I provided this as a copy as well, there's an excerpt of it, FY26 budget issues from, and you should have a copy of this anyway, FY26 budget issues, it's Bulletin 2025-2. Several cities and towns, and I heard about this at conferences, their cities and towns were in a bind, so they did a one-time transfer so that in the next fiscal year, they could essentially use it as one-time monies to balance their budgets. And the Department of Revenue said, you excessively transferred too much. We didn't take any sanctioning actions this year for whatever reason on these various cities and towns. However, in the future, don't do this. And if you do this, the Bureau is allowed to do whatever, act under the authority of the commissioner and do those things. So the DOR is now actively looking at this as an issue that has not shown up in prior fiscal years. So they will be more on guard about that with the various cities and towns. But you can look at all of that within the full FY26 budget issues document, which I've given you a full copy. You have to read at your own leisure. You want to look
What I
at what
find interesting about that is that the state created the problems that forced the towns to use the money that way. That's just my opinion.
So in terms of a recommendation, it's not that it's not an active issue that the board is looking at. It's not that there aren't, certain goals and targets for it over, whether it be a 4-year or a 5-year span that the board is looking at. But part of the problem is also how much is being allowed to be appropriated within each fiscal year. I had communicated last year to the town administrator that we needed at least, I want to say it was 140 or 145,000 is what the board voted on and we talked about, because we were going up into a revaluation year. Typically, the last revaluation years that we've had, it's over 120,000 in exemptions and abatements, typically higher on the abatement side for those years. That didn't happen like that this year, as I've explained. It was different from other past revaluation years the town has had. Instead, in the budget book and what was sort of figured ahead of time for the levy limit, it was budgeted at $100,000 that the assessors could raise for overlay. If there was not more state aid or free or new growth available in the town, that would have meant that for the abatements and exemptions that were granted that year, you would have been cutting into prior year's abatements and exemptions to fund that, which would have been a structural deficit on the budget, because now you're cutting into the remaining balance of overlay is really like a one-time fund source. You start cutting into that, that's okay, but you need to correct it so you don't keep exacerbating how much you're cutting into it. Same as you don't want to just keep padding money onto it because it's not a savings account. Money that goes into overlay is considered for the purposes of overlay. Until the assessors are allowed to vote for it differently, out of that. Otherwise, the rule is it's for overlay, it's for abatements, exemptions, and uncollectibles only, not anything else. It's not a piggy bank, it's not a savings account, it's none of those things. It is only for those 3 categories. And what else was I going to mention? Well, I just ran out of my train of thought, so I think this is a good time to stop talking.
It's like this has been very informative and
Yes.
been very patient with us. Thank you.
Yes, thank you very much.
Yes, thank you very much.
You never failed me. I am very impressed. Do an extremely good job.
Yes, he does.
Yeah.
All right, I think I would like to close the part with Justice. Are we
Yeah.
all set?
Yes.
Okay, thank you very much, Justice.
No problem. If there's any more questions or if anyone's unclear on something, you can always email me, or like I said, I included the full documentation in packet so you can read it and make your own decisions.
I very much appreciate this additional
Yeah.
information.
No problem.
Thank you very much.
All right, thank you.
I would like to ask my fellow members as to what, if any, further action we wish to take tonight.
I guess I'll start.
Okay,
I,
thank you, Justice.
No problem. Have a good night, everyone.
yeah.
You too.
Going into the conversation based on what the auditor was saying, I kind of felt there was a lot of money sitting there going, why are we putting this aside? After Justice's explanation, I'm less inclined to believe that. I think it's I think we should leave it alone.
So, or drop it down to the 600, like he had suggested.
His plan, I think, is what I'm trying to say is,
Absolutely.
yeah, it's solid. I think I'm losing the words I want. It's
Planning.
planning, it's cautious, but not, I think, overly so, given the rationale behind the decisions they've made. So that's my opinion.
I agree with you 100%. I think he's doing the town justice. That was
No
kind of
pun
weird.
intended.
By being very conservative. But in the same aspect, he said, he doesn't disagree that it should be dropped down to about 600,000. So that leaves us with about 142,897 in excess. But again, we can transfer it over, but they're one-time funds. So technically, we don't want to fund a police officer. We don't want to fund a department because again, we don't want to be using one-time funds for those purposes.
Yes.
So
I think something that you gotta keep in mind is you have to prepare for the future, no matter what we do in town government.
And that's just what.
And if the economy gets rocky and tariffs get high and people don't have any money, they may end up having problems paying their taxes. Because when Temple Stewart left and Baldwinville Products left, the selectmen at that time didn't dawn on them that there's other monies that doesn't come in at the same time. All the excise tax they collected, all of the people worked there, and even with Baldwinville Products, all of a sudden the town gets whacked royally, and you have to have backup.
Well, what you're saying is there's a ripple effect.
Yeah, absolutely.
It impacts the town.
And it may not happen for years and then bang, oh, all of a sudden. But I can see where people are struggling now, the elderly especially, because most of them didn't make a lot of money when they worked and everything goes up. Just trying to, I had an old lady when I was on the Board of Health that used to eat cat food
Oh.
because she didn't have money for anything. Her kids dumped a pile of coal in her yard and they left it there. It was terrible. So that is,
I guess what is the sense of this committee as to what to do? I think our options would be, to table it indefinitely and see what happens, or another option could be, I think I would like to hear from Mr. Roselli. I have tried to reach out to
a
him.
problem with that whole thing because I think he did something similar to the town, to Cheryl, where he said that she wasn't doing something right, but he didn't tell her what. I mean, he should have talked to these people. He should have talked to the assessors.
They should
Or he
have,
should have met with them or something.
That surprised me very much.
Yeah,
When
because
Justice told
To
us.
leave something hanging without any facts or numbers.
It was very surprising that Roselli did not talk directly to Justice and
Or
come up
even-
with a number. I mean, he just said you got too much money in the account. He didn't say by how much.
No, I mean, that's crazy. I mean, if you're going to, or at least, I mean, he should have been better, I think.
I think we
Should
should
have
handle
handled
that
better.
until we get a number from Roselli.
Okay,
If,
is that a
What did you? I didn't hear that part.
April suggested that we table this until we get a number from Roselli.
Yeah.
Which I would be willing to take it upon myself to.
Either that,
I'll do it too.
either that, or my thought is that we express the fact that as a board, we would like to see the number of residents that get work off, get moved up, and because it's really the assessor's determination as to what they can give, and that we would like to see the money increased. We don't have to give them a number, but we can tell them that I know the selectmen aren't too happy with this whole thing either, because that's not enough money that we could afford to give, but it's not up to us to give a number.
I think that's
It's up to them.
a separate issue.
Yeah, but I mean, really, you can tell them anything. That doesn't mean they're gonna.
Okay, what, just to close this out. I like April's idea that we table it until I can get some more information from Roselli. Is that something that's agreeable to?
Is getting a number from Roselli really going to make a difference in our decision?
Oh, well, the thing is, it was his recommendation.
Mhm.
Honestly, like, I kind of feel as though we could move forward with the 140. Justice said he would feel comfortable with the 600,000.
Well, you can do that.
So we could move forward with the 142,000 recommendation. But
That's
in
right,
the
that's a
same
firm number,
aspect,
and that's, you're
I'd like-
aiming towards that number, so that would be a reasonable
I
recommendation.
think that we could recommend based off of the conversation and being
100%.
schooled, like, which we seriously were. But then in the same aspect, I think that we should reach out to the accountant and we should ask for a number to make sure that going forward, what his recommendation would be, like each year going forward. And have a conversation, again, to educate the people. But as of today, I think it's appropriate for us to move forward with the recommendation of 142,000.
Yeah. Do anything.
I would
more.
agree. I would agree.
Okay,
Is that the sense?
that's fine.
Are you gonna increase the number of people?
That's already,
Okay.
Well, that number, that 142 number is a target. So we can put that in the recommendation that that's a target number that we suggest, that they continue to work towards.
The everything that the justice said, right? And if the recommendation, and it's not on the agenda for tonight, so we really can't talk about the rest of it, is, if, how do I put this? The feel, if the $500 is not the correct amount, then if our long-term thoughts are really more that amount should be increased,
That's what
I
was
don't
thinking.
think it's appropriate for us to give a number tonight.
That's what I was getting at.
Well, that, and I also still have concerns about the HERO Act. The rollout of that and what we don't really know the numbers of that. And like Justice said, it could be 2,000 or more or whatever, and we're still only gonna get $875 back.
And the Hero Act's going to roll out over a period of
Yes.
years. It's just starting.
Yeah.
So we don't know what the rebate numbers would be related to the Hero Act.
I'm attuned to just let Justice do his job.
That's
seems good
the
at
assessors.
what he does, and
Yeah.
he seems like he has a plan, and even though Roselli said that there was too much money, I don't know that he knows what Justice's plan is, because he won't speak to Justice.
That's right.
So,
He hasn't talked, I don't think he talked to anyone,
yeah,
and that's what bothers me.
I don't think he talked to anyone either. I think he just pulled this out
yeah.
of thin air.
So,
So I would like to make a motion that we table this for a further discussion and keep it under review.
You want to table it to a specific date?
That's what I was trying to figure out as I was saying that. Anybody have a recommendation for, do we look at it in 6 months?
yeah,
Do we?
see where we are, we will know better
Early 2026.
we'll know better where we are
So
as, as a town and as
Before we
the
get into budget
environment
season.
is.
yeah, I'd like to do it just before we get into budget.
yeah, why don't we have him come back in 6 months and give us the numbers at that time? So we can see.
Get
where we're at.
numbers from Roselli. I can reach out to Roselli.
You could reach out to Roselli, but in the same aspect, let's see where that overlay account sits in 6 months.
Yeah. So we need to make sure, so where does that put us? This is almost.
Having him here was,
January, February.
Yeah, yeah, scheduled for January. We can schedule it for either
Meeting.
January, February.
A meeting in January.
So motion to table.
Until,
January 2026.
Yep. We have more information.
Do I have a second?
second,
Further discussions?
No.
Okay, I'll bring this to a vote. Bev?
yes.
Yes.
yes,
Yes.
I also vote yes. Thank you.
That was really good.
That was good. Under old business for a discussion and possible vote on demand letters to the town of Phillipston and the Commonwealth of Massachusetts State Department of Education, DESE. So I believe if you look through your packet, there is a recommendation for the select board and a draft demand letter to the Phillipston Select Board from the Templeton Select Board And then also a letter to the State Department of Education, a draft letter as well. And I guess I would like to start the conversation by as far as what to request that the town of Phillipston pay, that seems to me to be an elusive kind of number. Based on Anne Marie Geister sent a letter out, which I forwarded Jacqueline and to April separately about about the potential dollar figure. That's one way of looking at it. And Anne Marie Geiser also sent out a per pupil cost for fiscal year 2024. If we look, and the numbers are approximate. I know, that members, when we last discussed this, members expressed the fact that they wanted a number that is as close and as exact as possible. And these numbers are still they're only approximations, they're not exact numbers. So on the one hand, there's really the need to get something before the select board for them to act on. I think to let this fester any longer is not, the best interest of the town. But there's also the other issue as to what what number should we recommend?
Well, that's a concern too. You have the school committee and the school department. You ask for a number and they can't give you an exact number as to their budget deficit. Ultimately, that's what it deflects.
Mhm.
Like that's where it sits. So like they're putting it back on us to try and figure out this number. They need to provide us with a number. It's part of their budget. They should know how much they're not receiving. I think to put it back on us.
It's not that they're not receiving, they're receiving it from us.
Us, yeah.
Well, yeah, they're getting it from us.
Yeah.
But
But they can't just do the calculations because, they can't determine how much the bus costs. I tried to get like a bus breakdown and it was like the buses cross both town lines, and that's why it can't be just determined like, if you could drop 3 buses out of the elementary rotation, like, because of the way the routes work or whatever, it's the most efficient way or something along those lines. So the number I came up with was just 90,000 was just based off of, as Noel says, back of the envelope numbers for what elementary transportation might cost. I mean, that's any guess. If we didn't have to pick up the elementary kids, maybe we'd get a lower contract number. I don't know, and then the bond issue.
But I mean, if they can come to us and ask us for X amount of dollars each year, then they should be able to provide us with a solid number, is what I'm saying.
And yes, they should. And if they leave it to us to calculate it, and Phillipston leaves us to calculate it, do you know what numbers I want to use?
Billion?
I want to use the top most expensive numbers. And you don't ask, you don't get. And if the school the school is unable to say how much it actually costs to educate per child and transport each child in the district, that is a problem within their budgeting.
Yeah.
And
Why do you think
I
they're
said it.
accepting a contract for the amount of money they accepted it for?
And so the bottom line is they either need to give us real numbers or we'll calculate a number that Phillipston is not going to like. And moving forward, when they come in front of do their annual review of their budget, there may be more questions asked and a lot more detailed questions asked that they're going to have to figure out how to properly calculate. They have a budget.
as long as they don't have to do anything, they will stay and just
Do nothing.
do nothing.
Well, I don't think the Phillipston students should be in the Templeton Elementary
Yeah.
School in September.
Absolutely not.
And that's probably going to become a soundbite,
Mhm.
but that is the truth, because the town of Phillipston voted against putting the students in the Templeton school system.
They wouldn't pay
This
for it.
School, excuse me, the Templeton Elementary School, let me get it out right. And so the school was actually designed for only to house Templeton students. And as such, you know, I don't know how else to put it, but the school is 6 years old. And based on the last select board's last meeting select board's
Right.
comments, it's over capacity.
Yes, it
And
is.
it's at 6 years old for a 50-year school. This is not something that can wait. So so my long-winded way of getting that is we leave the amounts blank.
Yeah.
We make the recommendation to the select board to take the next action.
Okay.
There are 198 Phillipston kids in Templeton Elementary School, as far as I can remember.
There's 95 was what Dr. Cassavant said as of October 2024. 95 students from Phillipston were attending Templeton Elementary.
Right?
If I may, to Liz's point, I agree with Liz that we should ask for the higher amount. And I did a breakdown. It's not exact, but if you do the breakdown by the Phillipston share of the bond issue for the elementary school, you do that, their share of the bond issue is roughly $123,000. And you add the $90,000, I got a figure of $213,171. And you multiply that by 6 years and you get just under $1.3 million. And that's the higher amount. The other way that you can do it is you can take the per pupil cost, which last year for fiscal year 24 was 21,447,783. And I'm sorry, that's the budget.
Yeah, I was gonna say,
And then you take the fiscal year 24 per pupil cost. It comes to $16,272.97. That's the per pupil cost fiscal year 24. And you take and you
Did you
take
say-
15% of. So you take the $16,000 per pupil cost and you multiply that by the 95 pupils in the elementary school, and you get a figure of $1,545,000 change.
That's the number we use.
And then if you take 15% of that number, because there's a lot, that's given out, you get $231,000. 889, and then you multiply that by 5 and you get $1.1 million, which is less than the bonded figure of just under $1.3 million. So I think that we should ask or make a recommendation of $1.3 million, which would be the bond issue and interest and the cost of bringing it. So it should be a minimum of $1.3 million.
it's a shame this has gone on so long. It never should have had to. It shouldn't have.
Well, it's a shame, but we're trying to do something about it moving
That's
forward.
true, that's true.
Moving forward,
Because I don't want to build another school.
I don't want to either.
No.
A new school will cost $100 million.
Yeah.
Um,
And we don't have enough room. if there are areas in town that may get populated, if all the elderly leave their houses. When I'm gone and the Bart's gone and the dog's gone, more than 2 people are gonna move into my house. And they're gonna bring their kids with them.
What's more concerning too is the rate and the size of the houses being built in Phillipston.
Oh,
Oh,
yeah,
yeah.
they're not a little town anymore.
Yeah. They're big houses going there and
No, and something that I pointed out to April too is that, again, this is back of the envelope calculating, but if the state forced Phillipston to comply fully with the new Affordable Housing Act, they would have to build 150, at least 150 units of housing tomorrow. So if you take,
It is.
if you take that and, you know, that would add at least 200 children.
Well,
And the state could very well make Phillipston do that. They're very, the state's very intent on enforcing the Affordable Housing Act.
the builders that have plans for Templeton would just crush the school. Because there's,
At least Templeton is close to the 15% minimum of the Affordable Housing Act. The state could only force us, if they decided to do that, to build no more than 15 units of housing.
Yeah.
Phillipston is completely different. They don't come anywhere near meeting the Affordable Housing Act. And, you know, the figure that I calculated was at least 150 units of housing.
Can we put something on the September meeting for actually I'll discuss that at the end. But in the meantime, I think we need to.
Yeah. I
What
think-
would you like, what would you like to do with this?
I would like to propose that we submit our recommendation to the select board. I would like to propose that we actually ask for 1.5 million as opposed to 1.3 million. Reason being is because we are having to already support the elementary school and other aspects within the town. So it's more like 1.5 million because we have upkeep of the fields, we have upkeep of all, you know, other things. So 1.5.
Okay, I think that's fair.
it's good to me.
Is that agreeable?
yep.
All right, then why don't we use the figure of 1.5 million? You see the paperwork that Jacqueline and April together prepared. Is that agreeable that we fill in the blanks with 1.5 million?
The rubber hits the road. Yeah.
I so move if you need a motion.
Yes,
So moved.
all right, I'd like to give Jacqueline a time, you know, to write out the
Motion to,
motion to accept the drafts as written. And insert the figure of $1.5 million.
Okay.
And what I would ask if this is accepted, is there any further discussion?
No, sir.
And are you all set, Jacqueline?
Yep.
All right, at this time, you made a motion.
I'll second it.
All right, second. Any further discussion?
Yeah, now we're talking about the demand letter to the Phillipston the State Department of Education or the select
We're
board.
gonna write a
Oh.
letter to the select board.
Yeah, we have 3 letters.
Set.
Okay.
Yeah, it's these letters that are in your packet.
So we're talking about the first one, right?
So it would be that one we would send from us and then the rest are drafts that
Okay,
they can
the
do what
only
they
thing
wish.
that we should discuss is if these demands are not met within 60 days, the town of Templeton or private citizens of the town will pursue legal action to recover all monies owed to the town and seek the immediate removal of Phillipston students currently attending. We want to go there?
Mhm.
Yeah,
Yeah.
okay, all right.
They have, I mean, this is just drafts anyway, so
Yep,
they
yep.
can,
They can
Send
tinker
this-
with it or
they
send
can
it
take
to
it
town
to council.
council.
Take it with a grain of
That's file
salt or
13.
whatever. Okay,
But what we would do is, the letter from advisory to the
Yep.
select board, the draft would remain the same.
Yep.
All right,
Mhm.
and then on the demand letter to the Phillipston Select Board is that you see 2 paragraphs with blanks.
Yeah.
All right, so Templeton's expenses for bonded indebtedness, transportation costs and interest.
Yeah.
For 2020 amount to, I would put a total of $1.5 million and divide that by 5 for a figure per year,
Was it 6?
or 6, yes.
Well, they can ignore it if they want.
So $250,000 per year and times 6 is your $1.5 million. Kind of nice round numbers.
Mhm.
And then, just so everybody is on board, the next paragraph, so that would be that first paragraph with blanks.
50,000.
Yep, 250. Amount to $250,000 per year for a total of $1.5 million to
Yep.
date.
Their attention.
And then the next paragraph, we would just strike that totally.
Okay, based on the per pupil cost.
Okay, everybody clear? And then later on, the letter to the Phillipston Select Board is on the last page that you call an immediate special town meeting to pay the amount of $1.5 million.
Yeah.
And then we would keep the 60-day period of time.
That will wake them up.
If it doesn't wake up the select board or their town administrator, it should wake up the parents
Yep.
to go
Yeah.
and speak.
So that's the
So
section to the Phillipston Select Board?
Yep, and
Okay.
then the second, this draft is missing a number, just 1.5 goes there.
Yes, on the final letter to the Commonwealth of Massachusetts, you'll see in the second paragraph at the next to the last sentence. Since 2020, the cost of Templeton due to Phillipston's failure to pay its share has amounted to approximately
Yep.
$1.5 million.
Mhm.
Then these changes, what I would ask after we vote, assuming that we vote for these changes, is that I will ask Jacqueline to make up 2 copies of the recommendation and the demand, the letters to Phillipston and the letters to the State Department of Ed
Yeah.
Commissioner. And she'll make it available in the selectman's office for us to come in and
Okay.
sign. I think all 5 of us should
Yep.
sign it.
Mm-hmm.
So we have a motion. Could you just read back the motion?
The motion is to accept the drafts as written and insert the figure of $1.5 million. Moved by Liz, seconded by me.
Okay. Any further discussion? Okay, I'm gonna do vote by way of a roll call vote. Bev,
Yes.
Yes.
April,
Yes.
Jacqueline,
Yes,
and I also vote yes.
I'll put the motions from last week all in the same envelope. Like in the same
Yep.
folder,
Sure.
and someone can just come and sign them all, because I have to make a second copy of these too.
Great, thank you.
Yep.
You're so good.
Okay. Yeah, thank you all. I think we have very good discussion on that issue. For the discussion and possible vote to approve a $201 invoice for annual dues to the Association of Town Finance Committees. Has everybody had a chance to see the invoice?
I did see the invoice. I did have a question. How often do people attend classes, seminars? Are we utilizing this town finance committee to its?
We're not. I can tell you, I've been on the advisory for almost 3 years. I have not personally used it. And Bev, I kind of changed my mind because Bev has been an advisory committee member off and on for many, many years, and she felt that it was useful.
Absolutely.
And I give great weight to what Bev has to say.
People, like,
I've,
bet that
I,
some,
right, let me explain.
how many people have attended? If nobody's attending.
Oh, well, because
They issue
apparently
information.
lately they haven't, but I have been, Bob May went with me. There was a group of us that went. I was so impressed because for one thing, they have webinars that you can learn a lot from on the Association of Town Finance Committees. It's online. They have the handbook. The handbook, you really can't do this job if you don't look at that and understand what your role is in finances of the town. It explains everyone's role. It provides you with really good information. You can't do this job if you don't know what you're doing. And the webinars are, sometimes they're not exactly what we need, but sometimes they are. And you can watch them at your leisure. There's one on August 6th. It's a municipal legal updates. They're talking about land court decisions relative to tax title and taking and calculating interest, which isn't for us, but you still learn something. Talking to Justice today, I learned a lot. October
Can I ask you
18th,
to get that schedule?
online.
Is this from the MMA or from this other thing?
Um,
They're two different.
There's
meetings.
two of them. There's Association of Town Finances. That's,
There's also the Division of
Yeah,
Local Services.
yeah, and then
which I
you
do.
can look and you can find the handbook. And the MMA, October 18th, they have a meeting. And I went to that. And that's when a group of us went, we carpooled. And I was so, there are different things you can go to, so you can pick what you choose. And it's going to be in Sharon, Mass. They don't have the agenda up yet, but it's going to be October 18th. It's a Saturday from 9 to 3. I really think that it's up to you if you want to look into it, if you want to learn something, because if you're going, you guys are young. You're gonna be able to do this job for a long time, and anything you use, you can learn about other aspects of town government. So for a lousy $200, I don't see how you.
I personally use the MMA stuff and I enjoy their conferences. I haven't used
Yeah.
this one when I'm not sure what the
The
name.
Association of Town
Yes,
Finance
yeah.
Committee, there's a lot of information there too.
Yeah,
And the hand,
you've really persuaded me. I initially did not want to pay it, and then because I, like Jacqueline, I use the MMA, but I do think the $200 invoice is money well spent.
and it gives you a good concept of what our role is, and it's not to snuggle up to the selectmen. If they are presenting something that we don't feel is acceptable, it is our job to support. We are working for the citizens,
Yeah, we're independent.
independent. The selectmen work for the citizens too, but as we all know, that always
We're the
doesn't
check on the
work.
balance.
Yep,
so
yep.
that's-
So I just can't see, you may as well not be here.
Okay. Any more discussion concerning the bill? I've been persuaded by Bev. I really have.
I won't have to beat you up outside.
That's nice. Okay, I will entertain a motion at this time.
I move that we approve the $201 Association of Town Finance Committees annual dues.
Do I have a second?
Second. And I will provide transportation for some of us, October 18th, keep it open.
Well, that's better than beating me up in the backyard.
I'll drive Bev.
Okay.
In your parking.
Okay,
Oh my.
all right, I'm going to call the roll for the vote. Bev,
Yes,
April.
Yes.
yes.
Jacqueline.
Yes.
I also vote yes.
Check out the handbook too, it's online.
Good.
It really will provide you with a lot.
For 4C, I would just, I'd like to defer the BVA. I don't seem to understand what months of the year there are.
The July one's not out yet.
Oh, it says July.
I did. I apologize.
Yeah, it was, I'm kind of looking at all this stuff and I'm like,
I like to blame it on somebody else, but I can't. I need to take lessons on reading a calendar. So I would,
it's been a long time since I actually looked at one of these, so it was interesting.
okay. So anyway, I'd like to table that. We will certainly spend our next meeting in August going, over.
You promise, sir.
I know. Well, I guess you're gonna be beating, I guess you're gonna be beating me up with that.
Next meeting is
Alright.
September.
Yes.
September.
September?
Usually take-
I'd like to have a meeting next month because there are members who want to put items.
Totally fine.
No,
No.
my August availability is nil, so
It's
you
nil.
can count me out on that one, yes. I have young kids. My kids are 6 and 11. We do all the things all the time.
You can stop doing
I know.
that. Okay.
They'll hate me next year. Maybe next year I'll have August availability.
Um, I will, I did hand out for everybody, the comparable town data that advisory developed in the early part of this year. I believe we developed in either February or March.
Yeah,
Do we have to vote to table that? Oh, no, we just, never mind.
Just,
Say that again, I didn't hear you.
No, no.
For discussion about comparable town data, I just would like to discuss this. This is something that Liz raised first meeting. She was a member of advisory, first became a member, is how should we use the comparable town data? And I know when we discussed this issue with the select board at our joint meeting in late June, the discussion really, the members pointed out that through the Division of Local Services that they have comparable town data. And the sense I got was, thank you for giving this to us, but we can use the DLS data. But I do think that, in the past that we have done, wage studies based on this. Most recently, I did a study of the compensation for the town accountant position, and that position recently changed. We could certainly use the comparable town data for items like that. But I just would like to get a sense from the members as to how over the coming months we would like to use this data. I think it's very valuable data. It is the other 10 towns on the list are truly the towns that are closest to us in many different categories. Starting with population and items such as the number of miles of roadway or the number of police officers and firefighters. So I just would like to put that out for discussion as to what, if anything, the members would like to do with the comparable town data. Do you have any thoughts, Liz, I guess?
Well, I think this gives us, I think we can use this as a guideline for whenever we do want to do a comparison, saying, whether it's the number of officers or the size of the budget or the, our pay rates for different positions and things of that nature. So I think it's beneficial. I now have a list that I can go compare against. So I'm happy with the list.
Okay. Okay, any other member wish to comment?
Yeah.
Okay. All right, at this time, I would like to ask for member comments. I believe, Liz, that you indicated that you had some comments that you wish to make, so I would like to start with you.
All right, thank you. So there are things that will be under the next meeting that we'll talk about in more detail. What I did want to share with the committee is what I have been doing behind the scenes. Obviously, we can't have a debate. We can't have a conversation about this beyond I will tell you what I've been doing. So I have been going, what I did was I asked for the annual, I had asked for the June, for the June BVA, right? And but this isn't the final year BBA. This is just the June one that was given to me, like, it was dated July 3rd.
Was
And-
cumulative from last
beginning.
July until June.
Yes.
It's 11 months out of 12-month fiscal year.
It's almost 12 months.
Okay.
It's through the end of June. All right. So the numbers are close, so they're not exact. So there can be adjustments made. And what I did was I took a look at it a couple of different ways. And I just said, all right, give me everything give me a list of all the vendors and how much we paid in numerical order going from top to bottom. And then there were some credits in there, so I took those out and I ended up with the final amount. And then I started going through trying to figure out what the purpose of all these things were. And some things really, really stood out that I think are areas for improvement that that the town as a whole needs to get tighter on financial controls. There seems to be a lot of wiggle room. And I'm not saying anyone's doing anything wrong or improper, but there's a lot of room. And when I went through it, I am not going to call out departments. I'm just going to call some of the vendors that I kind of went, whoa, wait a minute. Again, for later conversation, but things like American Express across the entire town, we have spent over $88,000. Wow. In American Express. Amazon, $35,000. Then what are some of the other ones that I just wanted to call out very quickly?
It's
So-
Capital One, I see Axon
There's
Enterprise.
Axon Enterprise, we have Capital One, AT&T Mobile is over $10,000. So, and then, yeah, so it just kind of keeps going, right? And my point is, it's not to call any one vendor out or any one thing out. What I'm saying is that, looking at these things, I can't tell what was purchased. I don't have a clue what was purchased on some of these things. And then the other thing is also looking at the numbers is when you look at what we have actually spent, some of the numbers for the allocations. So the other piece of paper, again, later conversation, I went back from the February all the way through the June, the number of accounts, because the last line on the BBAs, so this is all public information, folks, says how many accounts, active accounts we had, 242, 245, 245, 246, so on and so
Yep.
forth, right?
Sure.
The allocated, right, is, as I understand it, and somebody can correct me where I've gone wrong, is the allocated is our budget, but the budget keeps changing every single month. I don't understand how and why. And then what I did was I took the difference between the previous month and the next month for the allocations and looking at the differences. I don't understand the differences. So that's all I really wanted to say, because we can't have a conversation about this now. But it just makes me kind of go, huh. Now, a lot of this is probably just educate Liz to understand what I'm looking at and how I should be reviewing this. But these are just some of the things that stuck out to me. And that was really it. Thank you.
This is incredible, and
I will send the Excel spreadsheets to everybody.
holy smokes,
Do not have a conversation with
I'm
anybody with
looking
this.
forward to talking about it at a future meeting,
Yes.
for sure.
So, do not, OML, I will send it to you. Keep your comments to yourselves.
Make a list of your comments.
Make a list of your comments for the next meeting. All right. Thank you very much.
April, do you have any?
Sorry, Liz.
No, that's okay. I am just telling everyone I'm going to send them the Excel spreadsheet, but we are not to have any conversations about it until our next meeting.
Make a list.
Make a list.
of your comments. April, do you have any comments?
No, I'll make a list.
Thank you.
Bev, do you have any comments?
I think that would be a good idea, and it's like the dealing with justice and what he's told us, you can always learn more.
Mhm.
And some of the things that may look odd, it may be very good
Very good reason.
explanation. But, you know, that's our job to look and ask.
Mhm.
So I'm good with that.
All right, thank you.
Do you have any comments?
Make any comments?
We had none to say.
No, I don't have any.
My last one.
You are the last one.
Okay. All I wanted to ask is, I guess I would start with you, Jacqueline. Would you be available, Thursday, August 14th? Said you're gonna be-
Yes, I can do that.
Is,
Mr.
Thursday-
Chair,
yes,
unfortunately, CPC is already scheduled for the 14th of August.
Good
Are
girl.
they scheduled for the entire evening?
7 p.m. You could do an earlier meeting if you choose.
And you need a half hour or an hour to?
Half hour.
Half
So
hour.
I would recommend the earliest you guys meet there is 6 p.m. They start at 7.
how about Thursday, the August 21st?
The 21st is open.
Is that agreeable to
Ye-
the members? Jacqueline, are you?
I could do the 31st, the 21st.
I can too.
As long as I'm on top of the ground, yeah, I'll be here.
So we'll have the meeting.
Here's something.
first, and we'll put together an agenda which will include, you know, all of the VAs, all of,
And when we can have a conversation about what I handed out.
You're gonna go to that meeting, you're gonna
I
enjoy
think that the bulk of that meeting should be devoted to your
it, kid.
I'll have more ready for that
The
meeting.
building.
All right, I will now entertain a motion to adjourn.
I'll second that.
Yes.